We're here to talk about the latest trends within the dental practice market. Anil, do you want to start with some of the trends that you're seeing?
Sure. I'd say based on the last 12 months, we've seen a lot of positivity in the market, and 70% of our deals are to the independent market, which is either your first or second time buyer, and then the remaining 30% are to the groups. And I think a lot of the activity is primarily debt linked. So what we've seen with the Bank of England is with them reducing their interest rates, especially with the last one not so long ago, there's been a shift in psychology where it's a lot more positive, where people are looking forward to a reduction on their loan as time goes on, almost a discount. So psychology shifted where people are looking to take advantage of the practices where they feel growth is available. And I'd say for the independent market, the ceiling is probably up to an affordability of maybe 1.8 mil, I would say.
Yeah.
North of that, you go in kind of group territory.
And if we just touch on the funding, if we go back 12 months ago, the majority of your high street lenders were wanting 20% deposits on the majority of practices in security. What we're starting to see now is banks being a lot more flexible as in terms of the deposits which are required, especially for NHS and mixed practices, or for individuals that own one site that have maybe grown that site now and can capitalise on their strong performance to go and acquire another site. So what we are seeing is a continued trend with individuals that own one site buying another site, and that gets us nicely into the micro consolidators, which has been an increasingly growing trend over the last 2 years, but certainly a more noticeable trend in the last 6 months is this tier of buyer, which are buyers that own anywhere between 2 to 10 practices, are being really aggressive within the markets in terms of their acquisition strategy. And why do you think that is?
I think it's linked to the growth they've seen already within their own groups. So I know we feel COVID was only yesterday, but it was actually 5 years ago. So at that point, a lot of business owners, they took out the bounce back loans, added additional surgeries, and they've capitalized on the private growth the whole sector's seen since that initial lockdown. And people have now paid down debts, they've got better cash flows, and they're able to get better leverage deals from the banks to expand their groups. The banks still love dentistry and they want to support the sector because it is recession proof, as it's shown time and time again. And what we see now is where the tier 4 consolidators are really out competing the corporates is primarily down to the deal structure, where you're more inclined to get all the money on completion, if not a small amount held back, with limited ties attached to it in terms of targets. And I think that's where that age-old myth of the corporates are just buying everything just isn't true, is it?
It's not true. I mean, probably less than 10% of our deals are agreed to the big corporates.
Yeah.
And the deals that they are moving forward with, and probably the strongest buyers in the market, are kind of that over £3 million deal book value. At that level, individuals and micro consolidators, there isn't that value there for them. There isn't normally the room to be able to grow, there isn't the low hanging fruit, and there isn't the value in them acquiring them sites, where for the bigger corporates, what they're looking to do is just add EBITDA to the group and benefit from the long-term success of that business. So the groups will continue to buy, but where we really see the market over the next certainly 12 months, based on debt, based on interest rates, based on the opportunity to grow these groups. We're seeing micro consolidators, individuals are pretty much where the market is in an increasingly growing trend. That's great. I think that covers it.
Yeah.
Thanks.
Thank you.